What's going on, everyone? I don't have my camera on. I do have my camera on, but it's dim. I need to get a light, so excuse the dim lights. In my next video, I will have a light. I just realized now that I don't have bright enough lights to be using my camera, because it's currently 6:19, 6:20. So, welcome to Stock Indices, and today we're going over my portfolio. What stocks am I currently trading? We're going to go over that. We're going to go over economic news, and we're going to go over just some assumptions I have. We're going to go over all my positions, account values, everything, what's been going on, stuff like that. So, hope you guys enjoyed this video. Going to try to make this as fast as possible, so let's hop straight into it. Oh, by the way, this is Stock Indices. If you guys are new to this channel, I talk about options. I'm an options trader. I've been trading options for about 2 to 3 years now. So I'm pretty experienced, and I've lost quite a bit of money. So I understand. I understand. I've lost money. I've made money, and I've lost it. I made it up, had a good cushion, lost it, blown accounts, all of that. So I've been there, done that. And I'm here to spread my knowledge with you over all the experience and the prior years of trading that I have gained. So hopping straight into this. Experiencing extreme volatility in the markets. Take that back. Sorry, not extreme volatility, but we are experiencing, of course, some volatility in the market, which has caused the markets to drop. So I had to find out what is the root cause of this. I look at the 30-year treasury, and we are down. And so for that reason, obviously, when the 30-year treasury and the 10-year treasury note goes down, the yields go up, and that causes volatility in the overall stock market as people put their money more in those 30-year bonds because they're safer, right? Yields are at 5% almost. Why not just, instead of choosing individual stocks that are extremely volatile during these times and during these economic slowdowns, why not just put it in bonds, right? People suck their money out of equities when yields go up as the cycle shifts, right? So that's what we got here. We got ZB/ZB, which is the 30-year bond future. You can see that it is down to 110.16 basis points. That is where we're at. Oh, what is this? This is not what I wanted to show. We had to cut that out. Like I said, yields are at, I'm just going to say it's 5%. We're at 4.923% on the 30-year treasury. So you can see the incline as of recently, and that's what's going to cause. That's going to cause market volatility always. So it's not a surprise to me what's going on. And that's like one of the main reasons. I'm not even going to get into economic data and that stuff because we already know what it's doing. So it's irrelevant currently. We're just looking at rates right now. As long as rates are continuing to go up, market is going to continue to slump, and volatility is going to expand this month with Federal Jerome Powell speaking in November, in the beginning of November, end of October. So it's to be expected. But yeah, let's go into the positions. Let's get into the plays. All right, so these are the plays. Here's the account value. I'm gonna be 100% transparent. I'm not playing with $100,000. This is a very small account, and so I'm not looking to make huge gains here. I am going though for 10% a month. That is about 10% is like the max you can really make when doing credit spreads, unless you're going to be extremely aggressive. I'm not sure extremely aggressive. I am waiting till I have a way larger pool of cash to be able to and do those riskier plays so I can actually afford them. You know what I'm saying? Right now, I'm making a slow gains. I'm going for 5 to 6 to 7, maybe even 10% a month. and doing that consistently over and over for the long run, so I can get to that next level. You know what I mean? So 3.4K initially is where we're at currently. We earlier in the week we were up to about 3.56K, but since volatility has been stepping in, I have a couple losers, and we're going to talk about that. So first thing is first trade I want to go over is Meta. Why do I have Meta? What is Meta? What did I see in Meta? Let's talk about it. Right. So Meta, which is Facebook. And the name is kind of cringe to even say, but Meta, that's the name of the ticker symbol. Facebook, whatever. It's trading sideways. It's not going anywhere. And, obviously, looking at the longer, this isn't even really a straight, the best trend line you could possibly make. I kind of just did it to show where the initial trend was. That's how steep the trend was steep. We weren't really seeing any big up moves and then any big pullbacks. It was just kind of going straight up. Can't really describe that trend. It's a trend. So I made a trend line under it. But it's a trend, so I made a trend line under it, but you can see it's kind of like all over the place. I'm trying to track that trend. It's coming down. It is respecting it at certain points, but down here you can kind of tell like it just kind of hung out around here. But the validity of it is like, yeah, you could do more trend lines, more steeper trend lines here and stuff like that. But I don't think at that point, I don't think it really mattered. You know what I'm saying? Unless you were looking at the near term trend, like something like this on it. If you're doing something like this on it, then okay, yeah, I would look at that, and then okay, we got a bounce here, and then we broke, and then we came back up, and then we failed again, and now we're down into this level, which is being respected. So I had that here, this I had this trend line that was being respected here, just to have kind of like a major trend line on it. But then that got, it's tinkering with that. So personally, I just think this trend is going to continue to move sideways. That's kind of, it's not, you can see the moving averages. The moving averages are just right through the trend. And that's showing a sign of sideways consolidation. So noticing that, this trend, there is no trend. Market is completely sideways. I decided to go with a iron condor. Now I use Webull. Webull is weird. It doesn't allow you to place the iron condor trades how I want them to be placed, and so I had to leg in the trade one at a time, which is completely fine. The iron condor doesn't have to be completely perfect where you're accepting the same credit on both sides, calls and the puts. It can be different. It can be 70. You can collect 70 cents on one side and 50 cents on the other side, which is exactly what I did. If we go back and look at, I don't think I showed you guys this, but this is kind of just the data template of all the trades that I have. So you can see Meta, I collected 52 cents on the call side. I sold the 360, 355, and on the put side, I sold the 265, 260. And I collected 70 cents on that, and that netted me 70. That's gonna net me about $122 by October 27th. And you can see the collateral here, all that good stuff. So that is what that condor is. If we want to check and see where these levels are. So very confident in this iron condor. I sold this iron condor about 31 to 32 days out of expiration. You can see how much wiggle room we have on this condor. I don't know exactly how, well, actually I do know. I was going to say, I don't know how I was able to get so far away in delta with these condors. We're so far away, it's almost impossible. Either side is going to be touched, even with an extreme move. And by the looks of it, I don't think one's coming anytime soon. But I was able to get so far away because, of the implied volatility. We're sitting at 56% implied volatility, which is decent. That's a decent amount of implied volatility for a decently high price stock. Sitting at $300 a share. you're going to collect some premium on that. So I was able to get pretty, a good decent amount of delta away from the current price. So I'm confident that this condor over time, I would continue to collect the data on this, and quite frankly, I'm not worried about too much right now of what Meta is doing because it hasn't shown me anything yet. No spike in increased volume, nothing. Even though the market is dropping drastically, Meta just continue to chill. So I like that. That's play number one. Meta, Iron Condor, classic Iron Condor. You see a sideways moving trend, just condor it. Don't even think about it. Just make sure there's no earnings coming up. Make sure, matter of fact, there's an earnings day coming up right here. When is that? So that earnings day is actually coming up before these contracts close out. So that'll be interesting. Pay attention to that. Make sure there's no earnings coming up. Make sure there's no Powell speeches. Make sure there's no extreme, volatile, dangerous things that can mess up your spreads. So that's all I got for that one. Next play I have is Nike. Nike gapped up. As soon as we gapped up, we just saw an immediate flush. And we saw immediate flush. Right, nothing. It didn't last. It wasn't a prop up. We saw a very big flush right off the open, and that was Nike earnings. Matter of fact, which I believe Nike beat on those earnings. So earnings, we saw a pop. Obviously, here we can see we reported 94 cents a share, and the expected EPS was 76. And so we surprised by 23% on the EPS, 23.9%, so basically 24%, but the revenue dropped 0.48%, which is, okay, revenue dropped 0.48%. I guess it's bad. Maybe because I looking at Nike's financials, Nike's is losing money because of their expenses and their expanded operations. So I honestly think, since they're not profitable as far as revenue, people are selling the stock. That's the only thing I can think of. So since we got that flush out, I think that Nike is going to fill this gap to the downside. So I have call credit spreads on Nike. What do we have? We have we sold the 101, 106 call credit spread. Okay. So where is this at? Yeah, up here, right here. We have here the 101 and then the 106. So we are currently stock has to move about 6% toward the upside. It's definitely possible. This trade expires on the 27th of October, so we have some time. We have about 24 days left on this trade that we could essentially go back up, and I could lose money on it. But with the way the market's moving, the volatility and everything like that, I'm pretty positive that we would need to see some increasingly strong volume towards the upside to make a move all the way back up here. We would need to see some very strong strength, some news catalyst, something to prop something up, something good, because Nike's been on a very bad streak. And so it's like, okay, Nike, what do you got here for us? So I'm just saying, I think that Nike's going to go back down or stay below at least into the 27th. That's just my assumption. I could be wrong. Nike fundamentals, missing out on revenue, not making money. Earnings are still beating, which is a good thing, but the company isn't making money. So those earnings are going to, the earnings may be lagging behind revenue, but it's definitely not making. Nike needs to do something to start making money again, because they're not making money. They have been in the past 3 years, but as of right now, they're not. So they're currently losing money because their profit margins are shrinking and everything. So I'm short on it. I don't have any reason to be bullish on it just yet until something else happens with Nike. So that I collected 34 cents on it. Implied volatility was poor, but I believe that Nike's going to go down. So I was just willing to just put. You don't want to soak up your collateral with bad implied volatility. It's not, I got to stop doing that. But I sold 2 contracts, so I collected $68. So it still would be a decent profit on it. So that's Nike. Next trade we got is Walmart. I'm sorry, I don't have my contacts on, so I can't see. If you guys see me just continuing to do like this, it's because I can't see. Walmart. Let's talk about it. Let's talk about it. Okay, we have iron condors. I love them because I don't have to know where the stock is going. It just has to go somewhere besides past my short strikes. I have the 165 sold on Walmart on the call side. Where we at here? Wait. No, I think that was wrong. What do I have sold on it? We have 165, 170. Yeah. I gotta change this. So I have to just change that up. The strikes that I have sold on that, you can see here, is I have 157.5 sold on it. That's down here. We're very close. If we decide to drop again another like 1 or 2% tomorrow, it may be it, because I entered in this trade up here. So at this point with the spike in volume through here, the pullback, today was low volume, so that's not, that's a good sign, showing that the sellers are kind of cooling off here. But if we don't see any footing soon, like tomorrow, the next couple of days, and we continue to drop, I'm gonna be out of these puts on these put credit spreads, these bull puts, because this is gonna begin to get very close to my stop loss. As you can see, I'm already down $54 on it. I'm down 114%. You can see right there. And the calls, I'm up 14.7%. I have the 165.20 sold on it. And that is way up here. 165.20. It's way up here. Let's get that one more time. There we go. All the way at the top, which I don't believe. At this point, Walmart's not getting back there for at least another month or two. So that buys us enough time to be right on the call side. But unfortunately, the put side seems to be getting quite close. And, it's looking bad, But, hey, we just stick to the rules. We cut the loss when we need to cut the loss. And we just continue to do the same process over and over again. You got to cut those losses, though, no matter what. You cannot hold. You cannot back hold. You will experience pain like you've never felt before trading credit spreads. Don't let them fool you. Credit spreads can be extremely dangerous. So we're going to cut that loss if we get, like I said, I'm at 114%. I have the calls protecting me to the downside. All we need is a couple up days, which we were seeing, but the market is just so bad and the volatility is just so crazy. It's really tugging on Walmart. And I can see it just, on the daily price action. Okay, we're almost at 20 minutes here. Don't want to make this video any longer, so we're going to end it off here with my last trade, which is QQQ. Oh, I didn't really explain to you guys why I got into Walmart in the first place. I'm over here talking about the trade, but I didn't explain. we see the trend, and we came down here. I saw this candle, which looked like, okay, we could potentially go up. Now, what I should have waited for was expansion in volume. The volume on this candle was very minute. Now, if I would have waited for something like this or something like that, um, preferably something like this right off of a pullback. We want to see the volume on the rally after the pullback be higher than the decline or the correction rally, the correction decline, the pullback. This pullback, the volume should not overtake this volume. This volume, really, when it comes to bull markets, you want to see volume really carry those rallies, or else they really can't be solidified. They can't be confirmed because they're weak rallies. They can easily be overtaken by volatility in the market. So I should have waited for that. That would have gave me extra confirmation. I probably wouldn't be in this Walmart trade if I just would have waited a little bit longer. But I'm already in. I'm just going to manage it from now on. If we continue to resume this rally and, we don't see a dump on it, I'm happy. But if we do, we stick to the plan and we cut the loss. Last freaking stock is QQQ. I just put this on today. What did I sell on it? QQQ here we sold 378, 382 call credit spreads. 378 is up here. So 378 is about here. Let's get rid of that. 378 is about right there. So we see 378 there. Just sold that. I'm comfortable with that. I think the market could continue. We saw some decent volume today on that drop. So we could continue to drop down, take out these lows, and if we do that, that's scary. If we do that, we got down to about right here, and if we do that, we got down to about right here. If we do that, we got down to about right here. So we have levels below. So I just kind of anticipated it. Now, if I was trading this with naked put options right now, the part I would want to take the trade on would probably be on this break here. I want to see a strong close on volume on that break and just manage it, because at this point we've already kind of broken a lot of these levels. And also, we're still sitting right here. We're kind of still sitting in this zone where this support is here. So, there still could be some support. We still could return. We still could flip over for the Qs. It's not 100%. Nothing's 100%. We just have to manage the risk based on our assumptions, keep risk tight, keep our winners long, and stay consistent, stay disciplined, stay self-aware, what I'm saying, of your emotions, because you will, like I said, experience great pain. I have another video on that coming up right after this one, but I have another video coming up after this one talking about a big loss that I took last month and explaining to you guys exactly why I took that loss and how you can avoid losses like that. If you're experiencing large losses and you want to understand why, you should watch that video because it is very helpful. So hope you guys enjoyed this video. This is Stock Indices, where we don't go for the huge 100%, 300%, 1,000% in one week. We don't care about that. We want slow, consistent gains over time to compound into multiple millions and maybe even $1 billion one day. Who knows? But that's what we do here. So hope you guys learned something from this video. I will keep you guys all updated on this account challenge. I'm just going to continue to add to this portfolio. I'm going to continue to make a return on it. I'm going to continue to manage my risk. I'm going to continue to place good trades. So I'll see you guys in the next one. Thank you for tuning in.